Everyone's talking about mortgage rates and inflation impacting affordability. But the real risk to you as a home buyer or seller in today's market isn't mortgage rates. It's how the government shutdown is affecting access. This shutdown represents the largest potential disruption to the U.S. housing market from a single policy intervention, with economic impacts extending well beyond any single homebuyer's delayed closing. We're 21 days in, and if this extends into November or to year end, we're staring down a quiet crisis that's already slowing down deals, limiting approvals, and cutting deep into local economies. Let's dive into the housing economics of this shutdown, as well as the direct restrictions you'll hit trying to buy a home right now. Housing makes up 16.4% of the U.S. GDP. I mean, that's big, with every median home sale generating approximately $125,000 of economic impact. Now, a report was just released from Home Abroad, a real estate investment technology platform, and they estimated that every single day, 3,619 home closings are at risk of not closing nationwide, jeopardizing $1.59 billion in real estate transactions. Now, this affects 40% of the national housing market. The longest shutdown prior to this lasted 35 days, and it spanned December 2018 to January 2019. Now, if this shutdown hits 30 days, it will create an unprecedented crisis in the real estate market, with nearly 110,000 home closings at risk of closing nationwide. And that represents $47.5 billion in transactions and another $13.8 billion a month in their economic impact. This represents lost jobs, commissions, inspectors, appraisers, home goods, moving and household services, local tax revenue, and small business income in every community. And when the government reopens, it's expected that roughly 10,000 fewer employees will return, which means permanent bottlenecks for USDA, FHA, and VA processes, especially those that require manual intervention, such as case number transfers or FHA condo approvals and certificates of eligibility. Agents and lenders are already feeling it. Buyers are too. I mean, I'm getting asked daily, will my loan fund? Can my FHA borrower still close? Well, here's the short answer. Yes, but it depends. Conventional loans are mostly proceeding as usual, as FHFA quickly adjusted their guidelines to accommodate an extended shutdown. Having said that, once we cross over November 1st, conventional loans will require a minimum of 2 months in reserves. This is going to impact many first-time home buyers, as guidelines today don't require any reserves for a primary home. It's also going to impact down payment assistance buyers who have little beyond the down payment assistance. The bigger impact is USDA loans, as their approvals are at a standstill until the government reopens. FHA and VA loans needing any manual action, they're stuck. Furloughed employees are shut out of government-backed loans, as are homes in a flood zone, which, by the way, is impacting existing homeowners for renewal in flood zones across the country. Additionally, anyone needing a Social Security validation is locked out of homeownership. Bottom line on these, if you're looking to buy a home and the process isn't completely automated, you could be sitting on the sidelines, not because your credit or income, but because the system's gone dark. And when the government reopens with fewer employees and the headlines move on, well, the damage will be reflected in slower closings, extended turn times, and frustrated buyers trying to get across the finish line. So here's the move. This isn't politics. This is economics. If you're looking to buy a home, know what your loan program is and how it's impacted today as well as on an ongoing basis. If you're planning on using FHA, VA, or USDA financing, talk to your lender as soon as possible. You want to get a very clear understanding of the possible delays in your transaction. And the housing market isn't collapsing. That's big. But it is clogging, and that can be just as dangerous. The question isn't if the shutdown affects housing. It's how long will it ripple after it ends. Now, here's how you win. Demand transparency on program dependencies like flood insurance and USDA and FHA processing, as well as income and IRS verifications. Negotiate seller buydowns and credits to hedge against the risk of delay, and structure your purchase as a buyer so that you have escape options if the shutdown drags on and your loan is affected. If you want an advocate on your side who anticipates the chaos, including the impact of an ongoing government shutdown, and turns it to your advantage, let's talk strategy. I'm Nicole Ruth, your real estate wealth advisor, and I'll see you next week.